the cycles that I was following in that Midcap 400 were telling me to look for a final high, to wait until late November, ideally right around November 22nd, 25th, and it even had a multi-month upside range target, is what I call it, around 3,400. So both of those things were angling a little in favor of the results that we saw in the election, and they both followed through on that analysis and on those cycles.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. And well, we've got Eric Hadik with us today, and you find him at Inside, that's INSIIDE, tracktrading.com. And we're going to do a little post-election follow-up, see what the markets, what impact the election results are going to have on the market, or maybe they've already been reflected, and trends that you need to pay attention to that will be emerging in the coming months. Eric, it's great to have you back. So elections come and go. The market always remains the market, but there's definitely influences from elections, right?
Yes, excuse me. Sorry, Kerry. Yes, thanks for having me back. And certainly the markets have a either influence or correlation to things like elections and other fundamental events, often casting their shadows before or casting their shadows ahead before an event like that. And that was a couple markets that I had been discussing and writing about that, while certainly not a clear indication, they were giving some clues and hints. Two of the ones that I really was highlighting throughout the month of October was, first of all, a buy signal that was generated in my work in Bitcoin in early October. It was a successive buy signal, another one in a series of them. But everything was showing me that Bitcoin should see an October-November surge. And at the same time, the S&P Midcap 400 was giving some strong buy signals in early October. And the whole time, the cycles that I was following in that Midcap 400 were telling me to look for a final high, to wait until late November, ideally right around November 22nd, 25th. And it even had a multi-month upside range target, is what I call it, around 3,400. So both of those things were angling a little in favor of the results that we saw in the election, and they both followed through on that analysis and on those cycles. And the Midcap 400 was kind of shocking to me just how precise it was. It rallied right up into November 25th, spiked briefly above 3,400, and has declined since then. So there's, some of those markets that give you a little bit of a clue, but certainly not something you would want to trade or make a decision directly off of.
Mm-hmm. So it's come to pass. Do you think the market has seen its final high here for a while, or the stock market, I should say, or are we going to see more of the same?
Well, I think that it is setting a multi-month high. And what I discussed back in early October was the setup, the structure from a technical perspective was reminding me of early June and that June-July period, equating to the October-November period, where you saw the small and mid cap indexes kind of take the lead and see stronger rallies than the large cap indexes. And that's what you've seen. And since that late November peak in the small and mid caps, the Russell 2000 also peaked right in lockstep with those cycles. Then you had the Dow and NASDAQ 100, S&P 500, follow through a little beyond that and initially set highs in early December. But I'm really watching some key levels in those small and mid caps to see if they confirm and or signal something larger than just a multi-week correction.
Mm-hmm. All right. So we've seen the price of gold go way, way higher. I know we getting in there. Looks like it's been sticking around the $2,600-$2,700 range. What are we thinking here? And is the election going to have an impact on it, or is it just the trend that was already underway continuing?
I think that it's more of the latter, that ever since late 2022, I've been discussing what I thought would be a multi-year bull market in gold. And coming into the third quarter, one of the key things I was watching was this very consistent, it's a little over a year-long cycle that gold has adhered to. It's a 12.5-month cycle, usually 54 to 59 weeks, although in the recent phases, it's been very close to that 54-week time frame. And it had set successive lows in September of 2022, October of 2023, and was telling me to look for an inversion and a peak in late October, which is when gold set its high. I think that high is likely to hold for at least a few months. Ultimately, I would expect gold to resume that uptrend, but there still is a question as to whether the intervening correction is complete, if it has seen its extreme to the downside. One of the interesting technical wave perspectives of gold's recent sell-off was that it really mimicked and duplicated its largest decline of the last year and bottomed right when it equaled that advance. So you had kind of this wave similarity comparison going on there, which is technically something to look for, at least an initial low. But again, I'm waiting for some clear indication whether the correction is complete. And if that's the case, I think we'd still stay in a trading range for another month or so before breaking out to the upside, or whether there's one more leg down before the correction is complete.
Okay. And let's see. Interest rates. We always talk about interest rates. They've been coming down a bit. We're going to see them go lower. Are they as low as they can be now?
I think that there's another leg down eventually that goes along with intermediate analysis, some 3 to 6 months trends and cycles, but also a much broader, much longer term cycle that I've discussed in the past, where you've had since the beginning of the U.S., there's been this 17-year cycle that has timed 13 of 14. So 13 of the 14 phases of that 17-year cycle has timed recessions in the U.S. And the only time it didn't was when we were getting into World War II. And that comes back into play in 2025. And there's a lot of other factors certainly leaning in that direction. I've also done some analysis and shown why I think that part of that recessionary cycle could also be some stagflation in there. But I do think that between now, really my cycles were bottoming in November for bonds. Between then and the first quarter of 2025, you could see interest rates edging lower and see perhaps some signs of that recessionary impact hitting the markets. But I think, like I said, towards the latter part of 2025, I think that you're going to see some new inflationary pressures and perhaps resulting in a form of stagflation moving forward from that time frame. So I think interest rates are in for a volatile time as evidence of each of those factors hits the markets and comes to fruition. But all in all, I do think that bonds have probably hit a multi-month low, which interest rates are the inversion of that. So those interest rates have seen a multi-month peak in mid-November, and that they should drift lower into the first quarter of 2025.
All right. So I guess we should talk about oil. It's trading like around just under $70 a barrel now, WTI. And that kind of fits in with inflation and interest rates and everything else. So what's your take on it?
Well, I watch each of the energy markets, crude, unleaded gas, heating oil, and even natural gas, which kind of moves in a different cycle than the other three, but also as a little bit of a proxy when there's some uncertainty there. Also watch the Goldman Sachs Commodity Index, which is heavily weighted in energy. And all of those factors, except for the natural gas, but the crude and products and the GSCI, were all telling me to look for a multi-month bottom in September of this year. And although we haven't seen any big move up from there, there was your initial rally in early October, but since then, all those markets have retreated and gone back towards the lows. But as long as that September low holds, which I expect it to, I do think that energy markets are going to see a new rally, probably starting in December and then carrying forward into first quarter of next year. So I think we're in a period where you're going to see some upward pressure on oil prices. Not necessarily a raging bull market, but something that is certainly tradable and has some nice upside to it.
Interesting. All right. What else should we be looking at?
Well, one of the other things that kind of played in with the election cycle is the dollar, US dollar. And, you and I talked back in 2016 and again in 2020. And what I discussed then and continue to focus on is a very general, broad correlation, but it continues to hold true. And that is the movement in the dollar based on the administration, Republican or Democratic, that is in power. And since the early 80s, you've seen a pretty strong connection between the dollar selling off during Republican administrations and the dollar rallying on balance during Democratic administrations. And one of the reasons for that, if you go back to the 80s, was certainly a strong desire for the dollar to weaken. It was very strong at the time, but the Reagan administration wanted to see the dollar decline to help exports. And so you had, leading up to and then after the Plaza Accord in 1985, you had representatives for the administration constantly on the airwaves talking down the dollar. But that mentality has carried through. And again, you look at over the last 40 years, the dollar has swung in lockstep with that correlation. And all of my work has been showing that the dollar should see a new decline in 2025. So that would fit most closely with if there was a Republican administration in power, if that correlation continues to hold firm. And so that's certainly the results of the election reinforce that outlook in the dollar. And right now I'm looking at the potential for the dollar to remain in a trading range into January, possibly spike a little bit above recent highs in January, but then from that point forward is when some downward pressures should begin to resume on the dollar.
Mm-hmm. All right. Well, yeah, we saw the dollar weaken up a little bit towards the summer, and we had talked, and I was wondering if that was the tip off that the election was going to go towards Trump, and so it happened.
It's more of a correlation while that administration is in power. So the outlook for the dollar was, and that's even what we discussed back in 2016 when I thought the dollar was going to see a multi-year top in late 2016, early 2017. And that's why I thought in the middle of 2016 that we would see a Republican administration. And then in 2020, just the opposite, that the dollar was looking like it would be bottoming and rallying for a couple of years from 2020 into 2022. That was, in my opinion, favoring a Democratic administration. And now here we are again. The outlook is really the thing that I focus on, because that's when the administration in power does have some influence on the movement of the dollar.
Mm-hmm. Yeah, it's just interesting to see. I got a question kind of off the cuff. One of our community, our FSN community, asked, this was Jim, said, next time Eric is on, please ask him if any of the charts that he sees are affected by AI or somehow indicative of the AI revolution taking place.
That's one of those things that's really too specific for the type of work that I do to really convincingly make a conclusion one way or another. I guess it would have to take into account a lot of different factors, whether that really does ultimately help with automation, or whether it has positive or negative impact on true employment as AI starts to become a competing factor in there. I mean, I do watch several of the related stocks for my own information and help, or as a proxy for things like the tech indexes. But I don't know that I would necessarily say that I can conclude anything from looking at a couple of years worth of focus on AI potential and apply that to the broader outlook.
I kind of figured that was what you would say, but you had the question, so I had to ask it. Hey, all right, Eric, appreciate you coming on. As always, find Eric's work at Inside Track Trading. That's INSIIDE tracktrading.com. And if you've got any questions, comments for Eric, myself, shoot me an email, kl@kerrylutz.com. You'll find the link in the show notes to this interview on financialsurvivalnetwork.com. And please, when you go there, sign up for your free newsletter like 60,000 other FSN members have done. Eric, appreciate you coming on. We'll talk to you again real soon.
Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network. Now more than ever.